Hello, everybody. Welcome to Monday. The S&P 500 was up 0.13% today. It wasn't here Friday, but it was up on Friday. So we've got 6 days in a row now that the S&P has been up. The NASDAQ was down today, though. So there's been a little bit of a rotation today to financials and what have you. The Dow Jones did well today, for example. And so we've been seeing that on a relatively regular basis for things that are, non-tech related, or the Magnificent Seven, the big tech stocks, still doing okay, but not maybe doing as well as some of the other areas. Matter of fact, the S&P equal weight index, where they, instead of weighting it based on the size of the company, they just basically weight it equally all the way across, is had a new all-time high today. So it's showing some broadening in the market as the expectation for interest rates come. And so, they're going to have rate cut most likely on Wednesday, half point, quarter point. Market will react to either one. It'll make a difference. But in the long term, I don't think it makes that much difference. Matter of fact, I wouldn't be surprised to see if the market doesn't come down here over the next couple of weeks, because everybody's expecting the market to go up based on these rate cuts. When everybody gets on one side of a trade, it usually goes the other way. So, we'll see how this plays out. However, over the longer term, say the next 12 months, if you look at the history, again, as I said before, the last 11 times that they cut rates, the market was up 9 of those 11 times, 12 months later, average of 14%. So that's, pretty good. And I think, it's not as important what they do on Wednesday with the rate cut, more important what they're going to do for the whole year. And obviously more important is how the economy is doing overall. Are we cutting rates and we're a little late and maybe we're causing a recession because we're late to rate cutting? Or are we still, just slowly but surely bringing down rates as the inflation cools and the economy cools a little, but still in that soft landing area? So right at the moment, we're in that soft landing area, but we'll have to wait and see. So it's a really fascinating time to watch. We'll see what happens. Keep in mind, what we're doing right now, in my opinion, is very healthy. We had a high, on the 16th of July. We dropped in August, came almost all the way back, dropped at the beginning of September, came all the way almost back. That's a very nice thing. You're building a base across that. And especially if we can break out of that base, which I think we will, we keep kind of trying to, which gives me some hope that, we're drying up whatever selling pressures above that might happen because of the rate cut, and the market jumps through and starts to take off a little bit. So we'll see how that goes. But we've got to just be a little bit patient here for this time of the year. I think, that'll pay off. And what's happening right now isn't bad as far as that goes. Now, I won't be here tomorrow to do the video. I'm going to be out of town, but it's the last time I'm expecting to be out of town for the rest of the year. So I will be here Wednesday when they're doing the, question and answers and what have you. And I can give you some analysis of what I've seen and we'll watch what happens with the market. So look forward to seeing you on Wednesday. Thank you very much.